Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. In the second video today, guys, we will take a look at the Japanese yen. We haven't taken a look at it for a long period since market stands just on standing rally, as you can see. Previously we have talked on this market has reached some targets on the weekly chart here. We thought that could be the double ripple sell pattern, but it hasn't been formed. The market has continued moving higher. But right now, as you can see, at least technically, we've got this pattern. So it's first up, close it below the 3x3, close above. And today we could get the close below. This will be the confirmation bar for the double repo sell pattern. Currently, guys, overall talks around the trading the Japanese yen to the downside is really a bit tricky moment because the rally on the Japanese yen is strongly politicized. So here's the very strong fundamental background that coming of the rate hike in the United States, the growing inflation in the United States, rising of the United States Treasuries bond yield, all stands in favor of the additional demand on the United States dollar. That's the first point, and the second point is the different crises and something of that sort stepping away, and demand for the safe haven assets is decreased as the Japanese yen usually treat. That's why market could take some pause here, but the trade in Japanese yen on the downside is very risky. That's why our video today on the Japanese yen potential double repo pattern actually has two major targets, two major meanings. First one is, as I said, is the double repo pattern per se, so maybe it could be interesting for somebody. But also the secondary meaning of this setup is if this double repo pattern indeed will work, this could be very important information for the other currencies, especially on the euro currency that we're usually taking a look at. So it means that on the euro currency, some retracement that it stands right now could be a bit stronger. Tomorrow we will get non-farm payrolls release, guys. What numbers we will get, it's difficult to say. It will be a bit poorer for the United States dollar, so this could trigger really this downward action, because as you can see, the scale of the potential target of this double repo looks real significant. So you can see 110 approximately 50% support, and 116 where it stands right now, the 6-point down. So it's real significant action. It's the half of the rally, guys, and it's real significant. But at the same time, what I would like to say is that if you will take a look at the monthly and weekly chart, guys, you will see that on the Japanese yen stands at overbought on the monthly chart, and that is very big reason to make some retracement. So overbought on the monthly chart could trigger really significant retracement, and sometimes even happens that when the market stands overbought on the monthly, it could push market to the oversold on the weekly as a retracement target. This happens very often on different assets. And the oversold for the weekly chart stands precisely at 110 area, right at the target of the double repo pattern. All this stuff could become the very important background for the other markets, as the gold market, as the European currency. So that has special meaning for us. That's why right now we're watching for the double repo pattern here and the closing of today's session, so whether the market will confirm this target or not. Also, it's important that market stands at weekly and monthly pivot point. So moving below the pivot here, and if you'll take a look at the hourly chart, 4-hour time frame chart, here market has dropped below the weekly pivot and right now stands at weekly pivot support 1. So consider coincide with monthly pivot point. So breaking through it will shift the sentiment onto the bearish side in the short-term perspective. That could bring the more confidence with the double repo pattern. Another moment why I'm talking about this double repo, guys, is because second top. Take a look at the second top. It's very interesting. This is not just some kind of the gradual reversal, but it's really some kind of the big reversal, guys. So take a look. It has taken the shape of the evening star patterns, long candles. So you can see here, market definitely was making the attempt to pass through these tops, reaching that. But as soon as it has reached it, it has failed and dropped very significantly. And then the second day drop is continuing. So it means that really could be the capitulation in the short-term perspective of the bulls on the Japanese yen. And that could really trigger significant retracement here. That's why we are chosen the Japanese yen for today analysis, and it's really could be important for as the Japanese yen as for other currencies. So let's see what will happen here. But overall background, I mean especially the overbought on the monthly chart, significantly increase the chance of the deeper retracement and makes us think and look carefully at other currencies, especially on the perspective of further immediate drop on the euro currency. As you know, yesterday all markets across the board have increased its value against the United States dollar since the huge stops have been triggered on the Chinese yuan, and this has led to the massive sell-off on the United States dollar. That's why this coincides with them. So we'll take a look at the other currencies through the prism of this situation on the overbought situation on the Japanese yen in the monthly chart. So that's why I think that overall pattern that has been formed here and could be confirmed today is really important. And also, yes, it could bring the just isolated opportunity for trading directly and isolate just this double repo pattern. So let's see what we will get.